Good morning, dear student. I'm Kunal Kiran from the Millennium School, Lucknow. Children, we have been discussing about journal. Yesterday we have solved one practical question, and we have seen how to generalize business transaction. Today I would like to discuss one important concept, that is discount. Although we have already discussed at the time of accounting terms, but here we will discuss from the accounting point of view how we will use these concepts in our recording the transaction in journal. So discount, we know it's allowances or rebate allowed by the seller to its customer, to his customer. So there are two types of discount: trade discount and cash discount. So what is trade discount? It says this discount is allowed by wholesaler or manufacturer to the retailer at a fixed percentage on the listed price of goods. It is allowed when goods are purchased in bulk, that is, large quantity. This discount is allowed both on credit as well as cash transaction, since it is related to the purchases and not to the payment. No separate entry is passed for the trade discount. So basically, trade discount is a discount which is allowed by the seller to its customer. Generally, that sellers are wholesaler or manufacturer. So they allowed this trade discount when they are purchasing in bulk or in a large quantity, or sometime a specified quantity. If you like, they have said this is specified quantity, if you purchase it, then we will allow some discount. So that discount, that trade discount, is a discount which is allowed by the seller to its customer when they purchase goods on bulk or in large quantity. It is calculated on the basis of fixed percentage on the list price or catalog price or invoice price. It is not written in this description, but that can be used as a listed price, catalog price, or invoice price. So trade discount is allowed at the time of sale or at the time of purchasing goods, and this discount is allowed, but it is not recorded in the books of account. So if you are purchasing goods of rupees 10,000, it is listed and you are getting 10% discount, then the purchasing price is 9,000, right? So the example they have given example that if a trader sells goods of the list price of rupees 1 lakh at 20% trade discount for cash, so first of all you will calculate the selling price. He is selling with the list price of 1 lakh and 20% trade discount is allowed. So we will deduct the 20% from 1 lakh. So 20% of 1 lakh is 20,000. So from 1 lakh we deduct the 20,000 and remaining 80,000 will be the selling price. So selling price after trade discount is 80,000. So sales as an income is 80,000. We will discuss about the journal later. Now now take a talk about, let us discuss about cash discount. So cash discount is another type of discount. It has different purpose than trade discount. Trade discount encourages bulk purchasing, whereas cash discount is encouraging prompt payment from the customer. This discount is allowed to the customer for making prompt or early payment. In other words, cash discount is allowed only if the customer makes the payment within a fixed period. Such discount motivates the customer to make the payment at the earliest, as the discount is allowed at the time of making payment, so the entry for cash discount is recorded along with the entry for payment. Discount is a nominal account, and as such it is debited when it is allowed to the customer and credited when it is received. So cash discount, the purpose of cash discount is different. When you encouraging your customer to make early payment, for that you are awarding them that discount. So cash discount is allowed by the seller to his customer when they make payment in a specified time, so they get the cash discount. Cash discount is actually recorded in the books of account because it is allowed as per the agreement, and it is a if you are allowing discount, then it is a loss for you, and if you are receiving discount, then it is a income for you. Discount is nature of discount is a nominal account. The distinction between trade discount and cash discount, we can easily say that trade discount is allowed by wholesaler or manufacturer to the retailer at a fixed percentage on the printed price, list price, catalog price, or invoice price. Cash discount is allowed if the customer makes the payment immediately or within a fixed period. When allowed, the point of distinction is when allowed. So trade discount is allowed when purchaser is purchasing in bulk or some specified quantity, right? Cash discount is allowed when customer is making payment in a specified time. Object, what is the objective behind allowing trade discount and cash discount? Objective behind trade discount is to encourage the customer to purchase more in a large quantity, whereas cash discount, the purpose behind allowing cash discount is to encourage customer to make early payment. Fourth, recording in the books of account. Trade discount is not recorded. Cash discount is recorded in the books of account. Deduction from invoice. Trade discount is deducted from the invoice price or list price or catalog price, but cash discount is not deducted from the invoice price. This is all about the distinction or difference between the trade discount and cash discount. We will take one example here. If a trader sells goods of the list price of rupees 20,000 at 10% discount and 2% cash discount, the net amount will be calculated as under. So list price is given 20,000. So I'm writing list price is 20,000. Less trade discount 10%. After deduction of 10%, 10% of 20,000 is 2,000. So the remaining amount is 18,000. This is my selling price. So 18,000 is the selling price, and after on this amount we also get 2% cash discount. The trader is allowing 2% cash discount from prompt payment. So 2% of 18,000 is 360. We deduct 360 and the amount comes 17,640. This 17,640 is the actual amount a seller will receive from the customer. So we will see how we will use these concepts in our recording the transaction. Another concept is compound journal entry. Till then we have discussed transactions in which two accounts are involved, but it is not a hard and fast rule. In day-to-day life there are transactions take place, and there could be a common account for two or three transactions. So we can pass a compound journal entry or combined journal entry. So it says sometimes two or more transactions relating to one particular account take place on the same date. In such cases, instead of passing separate entries for all such transactions, only one entry is passed, such a journal entry is termed as compound journal entry or combined journal entry. For example, on 31st March, 50,000 are paid for salaries and 20,000 are paid for rent. So there are two transactions. On 31st March, 50,000 are paid for salaries and 20,000 paid for rent. So, but they are occurred on the same day, right? On 31st. So there is a common when you are making payment for salary is a nominal account, it is expenses and cash is going out. The same way when you are making payment for rent is a nominal account, expenses for the business, and the same time cash is going out. So cash is a common in both the transaction, and they were happening because they were happening on the same day. So we can combine, instead of passing salary payment individually and rent payment individually, we can combine it. Salary account debited with 50,000, rent account debited with 20,000, to cash account total 70,000. We can pass individually salary account debited with 50,000 and cash account credited with 50,000. Rent account debited with 20,000 and cash account will be credited with 20,000. But instead of passing a separate entry, we can combine them and we can pass a single compound journal entry on the same day. We can combine two transaction only when there is a one common account with in between them, and the same time they also occur on the same day. Even if suppose salary was paid on 31st March and rent was paid on 1st of April, we can't combine them because both the transactions occurred in different dates. It is on We can pass compound journal entry only when they are occurred on the same day and there is some common account between them. Like in these two transactions, cash was common with them, right? So such entries can be passed in either of the following three ways: by debiting one account and crediting two or more accounts, by crediting one account and debiting two or more accounts, by debiting two or more accounts and crediting two or more accounts, such as opening entry. Opening entry we will discuss later.